It's time to do business. We have 25 minutes here in Business Incorporated, and here's what we have prepared for you. Egypt is getting about €1 billion from the European Union. And World Bank has lifted the growth forecast for South Africa. ILO, that's the International Labour Organization, they've shown us the numbers for 2025. Welcome to the program. I'm Indy John Mecca, and we start business as usual. From the global space, the oil price, we saw it flat on Friday. Both Brent and the United States West Texas Intermediate moving only a few cents from their closing prices after the likelihood of a U.S. strike on Iran receded. And both Brent and WTI rose to multi-month highs this week after protests flared up in Iran, and the United States President Donald Trump has signaled the potential for strikes on the nation. Later Thursday, however, President Trump has said that Tehran's crackdown on the protesters were easing, allaying worries over possible military action that could disrupt oil supply. So looking at the numbers, well, I don't have the numbers, unfortunately, at this time. I wonder what happened right there. But United States Energy Information Administration report shows that American crude and gasoline inventories had risen by more than what analysts had estimated and also dampened the market. Oil giant Shell released its 2026 energy security scenarios yesterday on Thursday with a bullish case for energy demand and oil growth. The company estimated that primary energy demand by 2050 could be 25% higher than what we had last year. From oil to metals, gold extended its losses on Friday after stronger than expected U.S. economic data dampened expectations on the U.S. Federal Reserve cutting interest rates sooner and softening geopolitical frictions that shrunk safe haven demand for metal. So we see that the color is red for metals at this time. From spot gold, almost 0.5% down. The price is $4,598.52 per ounce. U.S. gold is 0.5% down, $4,601.80 per ounce. Spot silver hit, and we know that it did hit a record high yesterday or so. A lot of profit taking settled on that. Investors will do what they have to do. So it's almost 2% down. The price is now to $90.70. Platinum is 2.8% in the red, $2,342.40 per ounce, and palladium 2.3% down, $1,759. Copper, the new big baby on the block, also faced its own profit taking, so 1.5% down at this time. Yeah, we're moving away from all of that now. The markets. Let's head to Kenya, where the country has secured a landmark zero-duty trade deal with China, winning preliminary market access that allows 98.2% of Kenyans' goods to enter the Chinese market without import taxes. This has been confirmed by government officials. The preliminary agreement announced by Cabinet Secretary for Investment, Trade and Industry, Lee Kianju, comes after months of negotiations aimed at boosting Kenya's export potential and addressing a persistent trade imbalance with its largest trading partner. Under the framework, most Kenyan exports, particularly agriculture, tea, coffee, avocados, macadamia nuts, they will benefit from zero-duty access to China, a development that's expected to unlock new markets and strengthen bilateral economic ties. And the European Union, that's the EU, they've released €1 billion to Egypt, marking the second tranche of a $5 billion strategic macro-financial loan that's aimed at supporting the North African country's economy. The disbursement, announced by EU and Egyptian authorities, comes under the Macro-Finance Assistance and Budget Support Mechanism, which is a key pillar of the EU-Egypt Strategic and Comprehensive Partnership signed in March 2024. The funding is designed to help Egypt address fiscal pressures, maintain macroeconomic stability, and advance structural reforms aimed at boosting competitiveness and resilience. EU Ambassador to Egypt, Angelina Ekhurst, highlighted that the release of the funds reflects Egypt's progress in implementing agreed economic and political reforms, which are prerequisites for continued financial support. She describes the growing partnership as yielding numerous tangible results in areas such as economic stability and sustainability growth. And now the World Bank has raised its projections for South Africa's economic growth, estimating that the country's GDP, that's the gross domestic product, will expand by 1.3% in 2025. And that's up from slower performance in recent years. According to the World Bank's Global Economic Prospects report, growth momentum is set to continue into the medium term, with further expansions expected through 2026 and 2027 as domestic consumption and investments pick up. The revised outlook comes amid broader signs of economic stabilization in South Africa, where reforms aimed at easing supply-side constraints and bolstering investor sentiment are contributing to a more resilient performance. Some good news coming the way of Ghana now. Fuel prices are set to drop marginally from today as the Ghana cedi strengthens and international petroleum costs soften. The Chamber of Oil Marketing Companies reports this, and they say that latest pricing outlook for petrol, diesel, and liquefied petroleum gas prices are projected to decline slightly at the pumps in the second pricing window of January 2026. The expected reductions come as the cedi continues to appreciate against the US dollar, and prices of refined petroleum products trend downward on the global markets. COMAC says that the combined effect of a stronger local currency and easing international products prices is creating room for oil marketing companies to adjust rates downward, offering consumers some relief at the pumps. And now, sub-Saharan Africa's labor force expanded by 15.4 million in 2025. This is according to the International Labour Organization, and that signals a continued rise in the region's working-age population. The report highlights that this growth presents significant opportunities for economic development, but also underscores the urgent need for job creation, skills development, and youth employment strategies. Analysts note that without adequate policies, the growing workforce could exacerbate unemployment and underemployment challenges. The increase in the labor force is a clear indication of democratic momentum in the region. Governments and stakeholders must ensure inclusive and sustainable employment opportunities, according to the ILO. The agency further calls for investment in education, vocational training, and entrepreneurship to harness the potential of the region's expanding workforce and support long-term economic stability. And now, the federal government has announced days ago the establishment of the Nigeria House Davos. This would be unveiled and celebrated more during the 56th annual meeting of the World Economic Forum. That starts on Monday, from Monday the 19th to 23rd of January in Davos, Switzerland. This landmark initiative marks Nigeria's first official national house on the Davos and represents a strategic national platform to project Nigeria's economic reforms. Glad to say that here on Channels Television, we'll be giving you every detail that will be happening there at that event, as our correspondent, Emperor Simon, and his crew will be there and be reporting live from Davos for Channels Television. That'll be all through next week. So you want to stick to Channels Television and get all the details. All right, so one of the big stories from Nigeria's economic scene at this time, apart from the economic outlook, which we've been hearing from a lot of bodies, has been the inflation numbers. We saw the inflation numbers yesterday, and we saw that it was eased. In fact, the November inflation was recalculated, and then that showed an easing between November and December. So we know that before now, the NBS had told us that inflation number for November was at 14.45%. However, a recalculated revised number now shows about 17%. And that means that there's been an easing in inflation number in December to 15.15%. Earlier today during Business Morning, we had the head of department at the Prices and Trade Statistics at the National Bureau of Statistics helping us to understand this change. I hope we can have the director, the head of department from the National Bureau of Statistics, who was on Business Morning earlier today, explaining some of those changes.
There is no significant change in the methodology for computing the consumer price index. We are still using last payé method, we are still using Jevon, and we are still using short-term relative to calculate our consumer price index. The only thing is this: if you can remember that we rebase our CPI, we started a new series in January 2025, the present time. And for us to compute year-on-year inflation, you must have two-time period CPI. CPI for the current year and CPI for the preceding year. The preceding year I'm referring to is 2024. And mind you, 2024 CPI, they are all computed based on the old base year, which was 2009. Remember, we started the new CPI with 2024 base year, January 2025. Now, for us to come up with year-on-year inflation rate. Now, what is inflation rate? Inflation rate is the persistent increase in general price level. And how is this indicator gotten? It's gotten from two-time period consumer price index. For example, year-on-year inflation now is December 2025 CPI compared to December 2024 CPI. And I told you December 2024 to January 2024 were all based on 2009 base year. Now, as a statistical office, for us to get year-on-year inflation, we need to re-estimate the old 2024, bringing them into the future of the new base year. And to do this, there are two approaches. You either use a single month index reference period or a 12-month index reference period.
And the other very hot issue in Nigeria now is economic outlook. We've seen the NESG forecast a 5.5% growth on the GDP this year, even though we saw a more optimistic forecast from the LCCI, putting it at about 7%. But let's listen to how the NESG arrived at 5.5% for GDP growth in 2026.
Nigeria's economic managers, private sector leaders, and policy experts converge on Lagos for the Nigerian Economic Summit Group's 2026 economic outlook, as the country sets its sights on stabilization, growth, and investor confidence in the year ahead. The event, which was attended by representatives of government, the World Bank, the International Monetary Fund, the African Development Bank, as well as some private sector leaders, kicked off with a presentation of an economic roadmap by the chief economist of the NESG.
Consolidation. The expected growth that the economy needs to really move ahead hangs around 5.5–6%. We also think that in terms of the structural weaknesses, we record currently manufacturing contributing 1.5% for the year, and then agri 2.2%. We need to move forward beyond this.
Despite optimism by the NESG on a 5.5% economic projection for this year, the Minister of Finance and coordinating Minister of the Economy who was representing the federal government, shared a slightly more conservative forecast and inflation outlook.
The inflation fight, it's everybody's fight. So as interest rates go up, the manufacturers, the investors feel it, government feels it, because our debt service costs, of course, reflect that. But we all agree that the first fight is the fight against inflation, because that's where, in particular, the common man suffers the most.
As Nigeria looks beyond immediate economic pressures, stakeholders at the NESG 2026 Economic Outlook, participants at the event agree that consistent reforms, policy discipline, and private sector participation will be critical to achieving the much-needed inclusive growth.
Of course, in the coming days, more conversations around the inflation number, the revised, rebased inflation number, and the outlook for 2026. Let's head to the markets now, see what the numbers look like at intraday. And Nigeria's market is positive. Well, thank God for that. 166,301.31 after it gained 0.15%. Now, one thing that could change or affect this is what has happened at Austin Lars, the chief executive officer. We hear, according to what we have at the NGX website, has sold 227.7 million shares after getting about 134% return on his investments. He's filed this to the Nigerian Stock Exchange, so it's official that the chief executive officer of Austin Lars, Mr. Shimoye, has sold shares worth 227 million naira following a remarkable 134. I wonder what that would do to shareholders of Austin Lars at this time. Obviously, there'll be a lot of scramble to get some profit before the price drops. But that's one market or one stock we should be looking out for at the close of trade. Now, away from Nigeria, we go to Johannesburg, where we see just a slight gain at intraday, 0.01%. At 120,883.56. In Egypt, that market is closed on Friday, but it closed positive on Thursday at 0.67%, 43,346.87, as well as Nairobi. Nairobi is not closed today, but these are the numbers for the close of Thursday, 193.87. And this is looking promising. Talking about Nairobi Stock Exchange getting close to 200, and we remember when this was less than 100. And we're still reporting this market. So it's a beautiful thing to see growth in the markets right there in Kenya. Move over to the Middle East. Markets are closed. Two of them are closed today, but Dubai and Abu Dhabi are open, and they're both positive at intraday. Saudi Arabia and Qatar closed on Fridays, and they both closed in the red. And then in the United States, look at those numbers there. The Dow is green, as well as the S&P and NASDAQ. This time, major U.S. stock indexes rallied across board. The S&P, NASDAQ, and it jumped 0.3. So they did even more than this. But these are the features after yesterday's close. In Asia, where market is closed, we see the Nikkei, a flip of what we had yesterday, in the red today. Kospi escaped that. And Hang Seng is also in the red. Looking at the other markets on that region, you see Shanghai and Nifty on opposite sides at the close of trade today. Let's see what investors in Berlin, in Europe, are doing at this time. We have Lars joining us. Hey, Lars, good afternoon. What's the market looking like? What's the color?
Yes, how you doing, Ini? It's good to be with you. We do have mixed colors here. We have a little bit of green when you're looking towards London, towards the FTSE, but it's also just a very light green, I would say, up just less than 1%, less than 0.1%, I'm sorry. And in Frankfurt, we're actually seeing markets down. However, the mood there is still upbeat in a way. No wonder, as the DAX has had a few great days and is currently at an all-time high. But it's also no secret that that doesn't in any way reflect the situation really in the economy, because large parts of the economy are indeed still pretty weak. We just heard from Porsche today how their sales in China have collapsed. It's just one of the many companies with that problem. We also have quite a few economists who say that despite recent economic growth, There's still a chance we might slip back into a recession even. So problems are ongoing in the real world. Yet markets are strong, and that is the situation here at the end of the second trading week of the new year.
Yeah, so earlier this week, Lars, we did talk about, that big trade agreement. And that's to be signed tomorrow.
Indeed, yeah. We were talking about the EU-Mercosur deal here, and it's just such a huge deal. It's worth having another close look here. It's such a huge deal if you just look at the numbers behind that, because we are talking about the world's largest free trade zone being in effect basically tomorrow after that signing. More than 700 million people affected here in the 27 nations here in the European Union, and then on the other side of the Atlantic, it's of course Argentina, Brazil, Paraguay, and Uruguay. Then there's also Bolivia. They're not yet in the group, but likely to join very soon. Trade of over 111 billion euros in 2024. Those are the latest number. And this deal is now set to cancel out tariffs on much of that trade on products ranging from Argentine steaks and Brazilian copper to German cars and Italian wine. Also looking past the numbers, what makes this deal so significant is the timing, of course. After all, this is all happening right now while President Donald Trump yanks the United States out of the international economy. When trade globally is shifting, old alliances are broken up. Well, here's a new one actually forming.
Yeah, a new one. It's a new world order, at least in the trade scene. But I hope both partners are happy with the terms of this agreement that's to be signed.
Mostly, they are mostly. If you just listen to what you hear from the governments or so that are involved, European Commission President Ursula von der Leyen says that the deal is, quote, a powerful endorsement of multilateralism in the face of an increasingly hostile and transactional world. And Brazilian President Lula da Silva called it, again, I quote here, a rare victory for dialogue, negotiation, and a bet on cooperation. Mind you, all this comes at the expense, of course, of the United States and China, the two most influential nations in global trade, but both nations that have become highly volatile and pose at least as much of a threat to other countries right now as they have been an opportunity for growth.
Yeah, two of the giants at loggerhead at this time last. Well, thank you so much for giving us updates, and to have a great weekend. And the signing tomorrow, I know you'll be there.
Definitely looking at it. Thank you, Ini. Great weekend to you.
You too, yeah, bye. All right, so let's track the crypto numbers. That's what I was told we'll be doing next. So we see the numbers. Bitcoin is still in the red at 95,384.86, lost 1.45% in 24 hours. It's simply a red market at this time. Ethereum, 3,305.68 after it went down 1.62%. A lot of profit taking happening at the beginning of the year. Now, if this was a Nigerian market, I would say this news I'm about to give you would lead to more of this, because here in Nigeria, the Securities and Exchange Commission has raised capital requirements for crypto exchanges to 2 billion naira. 2 billion naira. I wonder if this is a way of driving the crypto market away from Nigeria, but the SEC, that's the Securities and Exchange, they've increased that minimum capital requirement. I know that we did have conversations on this some months ago, but it seems the SEC is just determined to do that, and that's revised and will now be required to meet the new financial standards within a stipulated timeline. The measure aims to filter out what the SEC calls undercapitalized operators and promote the growth of credible and resilient platforms in Nigeria's crypto market. I'm sure Ladi will feast on this next week to get, of course, a lot of opinion and observations on that. Another story there is Moldova. They moved to regulate crypto under EU-style MiCA rules. A lot of regulation going on. Yesterday we heard of some countries, and now we also see another country. Google Play, they're set to ban overseas crypto exchanges from South Korea store. That's it. Google Play to ban overseas crypto exchanges from South Korea store. This according to Google's official policy page on crypto exchanges and wallet providers. And so that's what we're expecting from. Then we have another one. The Financial Conduct Authority, the FCA, has opened applications for a new scheme designed to help shape the future of stablecoins. That's in the United Kingdom. And the stablecoin sprint is what it's being called, taking place in March this year, will bring together innovators, consumer groups, regulators, government, and industry to share policies and define standards for the digital currency. Well, those are the stories making the headline in the crypto space at this time. And that also brings us to the end of Business Incorporated. Thank you so much for being a part of the program all through the week. The week starts again next week, and we hope to give you better packages, very relevant news, current. That's what we give you right here. Before Monday, however, you can go to our YouTube channel to watch Business Morning, Business Incorporated, and stay on top of every situation that you need. I'm John Mekwa. Have a great weekend.